Hey, so welcome to another session, Whayle Mentality. We got Mr. Karl Jackson here. We'll let him explain who he is and what he does. But before we throw it over to him, I do want to introduce my other co-founders here, Joy Howard and Shalimar Jackson. Guys, say
Hey,
what's up.
no relation to Carl, but hey, still a cool guy.
So we got a treat here with Karl, tax attorney out of Houston, and a friend, I would say, as well. One that I met way back when I was still on my Exxon Mobil days and working on my structure to leave and come as a more self-directed, self-employed enterprise here. And so Karl, I knew had a lot of gems to share with us, especially as it relates to wealth building, as our Whayle community is all about. And so we'll go into first where he started from, but then also what might be some of the things that his clientele are looking for as they're on their wealth building journey or wealth protection journey, and then just some of the things that he sees as we go forward and technology's improving, and how does that change maybe some of the outlook on how folks take these law strategies on the tax side and or other opportunities there. So with further ado, Karl, why don't you go ahead and tell us a little bit about yourself, where you're from, maybe where you went to school and what you studied, and how did you get to what you're doing today?
I got you. All right. Thanks, Leon, Joy, and Shalimar. I really appreciate the opportunity to be on the podcast. I've heard a lot about it, and this is exciting. So, um, yeah. So I am an accountant. Like that. Like fundamentally, I'm an accountant. I love tax. I'm a super nerd. I love bookkeeping. So it made sense, like in my long term journey, to kind of tie it all together as a tax attorney, because I can sit in that role of it as an advisor, but I can kind of work with entrepreneurs total team, right? So I got my accounting degree from Lindenwood University in St. Charles, Missouri. I'm originally from St. Louis, Missouri. Stay close to home. After that, I moved down to Houston, got my JD from the University of Houston, and a dual. I was in their dual LLM program, so I have a master's of tax law as well. So once I finished my law school career, which was exciting, and there like maybe people have horror stories, but I genuinely enjoy law school. I did quite well. At least I think I did quite well. I graduated near the top of my class, like top 25. So I really enjoyed it. Then I started in KPMG as an associate in the mergers, acquisitions, and restructuring tax group, where we worked on various cross-border structuring deals, debt workouts, distressed company work, like domestically and cross-border. And we worked on large oil and gas deals because we're in Houston, so our practice was primarily focused on oil and gas. And that's where I kind of saw how these large corporations, they are masters of protecting wealth and utilizing the tax code for their benefits. So I've seen amazing transactions where we have made hundreds of millions of dollars worth of tax disappear or be deferred.
Right. But it's still a bottom line help. However you look at it, it's a bottom line help. But keep on going.
Yeah. So I was at KPMG for 2 years, and like I said, I mean, that accelerated my career because we're doing 8 deals a day. But I knew, like, I always wanted to represent the entrepreneur. I wanted to I wanted to work closely with business owners, not just with the large corps. So I got an opportunity to move to a small boutique firm that did just that, called Cook Legal Group. And the main partner there, Lauren, is my mentor and has taught me so much. And I would say every one of my clients there does very well for themselves and are very smart in their respective fields. So I represent people from doctors to serial entrepreneurs to multi-level marketers that all are making millions of dollars every year, and they just need some help on how to minimize their tax exposure, right? So so there I learned how to tie what I learned at KPMG into the entrepreneur's structure and really help people achieve like current tax savings and also long-term tax savings, also asset protection. So, really, as I've grown, like once my clients are set up and I've taught them how to achieve those short-term tax goals, um, I've typically charted to transition to asset protection because once you start making millions of dollars, then the goal is okay. If a mistake occurs, and I get sued, especially if you are, engaging in a lot of deals and contracts, you're bound to get sued once or twice, right? So it's how do we protect that? So love my time at Cook Legal Group, and uh, I ultimately to get to the firm where I am today. I'm at Chamberlain Herlica, which is a top 10 nationally ranked firm in terms of tax controversy. Our tax planning group is very strong. I say, we're a middle market firm, but we can do deals between 5 million and 100 million or a billion. We recently did $1 billion deal. So now it's kind of like a healthy mix of my KPMG days and Cook Legal, so I can actually represent both.
Yeah, the
Right.
full
So
spectrum.
Leon, you referred me a fantastic client that I don't think I could have handled at Cook Legal, but now I have the bandwidth and the knowledge to take care of anyone you can refer. So I really appreciate that. So Chamberlain is a team of like uber tax nerds. I'm not gonna lie, like if you look at that roster, we have a lot of Hall of Famers in the legal profession that are my mentors and guiding me on how to assist clients even
Either way you're
more.
at.
Yeah, so I've been there, and so that's on the tax side, right? So I know we want to get into the crypto side, but
Yeah, but while we're talking on the tax side, before we
yeah,
leave that side, how
yeah,
as you described, like who you work with and who would hire your services today, as folks are trying to get to those levels, what are some of the things that you would say, like, okay, say somebody doesn't make $1 million a year, they know they can and they will at some point in time, but today they don't, especially in a subject matter like tax and accounting, which is not necessarily taught to everybody in all aspects. How does somebody set themselves up today now? Say if they're $100,000 a year person with a 401k and a W-2 income, and call it your middle class type family. How do they set themselves up in the right way where they can still see the type of tax optimization help today, but then really get the benefit, call it when they're also making those millions?
yeah. That's a great question. I think first they have to they're gonna find out quickly where the tax man's hitting them on their tax return. So
Okay.
I say be very involved with, okay, if you don't have a structure and your income's flowing through your Schedule C, and then you also have additions to tax on Schedule 1, um, how do we minimize that tax hit, right, within the rules? So the first step the CPA is probably going to recommend is to form an S corporation,
Yep.
right? So if you have $50,000, $100,000 of revenue, S corporation will help because S corp allows you to accept yourself out of self-employment taxation, which you would
And
have
that's a
to.
form of an LLC. The S corp is an LLC with an S corp designation, or is that's something completely different?
An LLC or a S corp or an Inc. So if you
Okay.
form a corporation
Uh-huh.
and elect S corporation treatment, or form an LLC, and you can elect to be treated as an S corp as well. Um,
Can
so
you, I'm sorry, real quick, Carl,
yeah,
can you explain the difference between an S corp and a C? Because aren't those the two classifications that you can do under either an LLC or an INC?
yeah.
Okay.
So yeah, you're right. So LLC can be like every entity classification. It can be a partnership, it can be a flow through, it can be S corp or C corp. A C corp is generally a taxable entity, right? So right now its tax rate is it's taxed at 21%. And like really you look at entities from the how do the owners get their profits, right? So one, a C corp is taxed at the corporate level at 21%, and then when you want to distribute earnings and profits up to the shareholders, that's in the form of a dividend, or um or you can also, there's borrowing arrangements, shareholder loans that can happen, right, to avoid those taxes. But generally, you're looking at double taxation to get the revenue ultimately to the owner, unless you pay the owners a salary. S corporation is a flow through entity, right, to where it's not taxed at the corporate level. The earnings and profits flow through to the ultimate owner, and it's taxed at that person's tax rate. So, and also that flow through isn't subject to self employment taxation, and it flows through on a K1. So you generally like S corps, because what if my personal tax rate is 21%, then it's only subject to one level tax. As long as if you take the corporate tax rate plus the highest dividend tax rate, the most that money will be taxed is like 36.8%, right? So if my effective tax rate is less than 36.8%, it makes sense to flow it through a S corp. So if I'm at 25% or even 30%, that makes sense. And also, we're not even considered state taxes, because if you're in California versus Texas, it just differs, right?
Yeah.
And that's when we go to the advanced topic. If you live in California, how can we kind of
Help you out.
make your income inbounded to Texas,
Correct.
right? But like just basics, if you and this is a thought. Like a lot of I have clients who CPAs have them in a combination of S corps and C corps, because maybe their opco is in an S corp, and then they push management fees to a C corp, so that is taxed at 21%. So like if you make $5 million, you're going to be at the highest tax bracket. You're at 37%. So let's say you want to, push some of your operations into a management company and pay that company, uh, you know, money to provide those services. Then you whatever you push over there, say it's 500,000, it'd be subject to 21%. So you're saving 16% on that money, even though it's going to be trapped in that C corp, you still have 16% more cash to utilize over in that company that can be used in your business. So there's ways to structure it to where you can use that money, as long as you don't want to use it personally. So it's a lot of good planning. Like for a person who is doing the 50 to 100,000, they're not the millions just yet. Then a S corp may make sense. A Bear LLC probably won't, because you'll be subject to self-employment taxes on all of those amounts, and that's at 15.3% on every dollar up to $140,000. So if you want to avoid that amount, a simple S election makes your CPA looks like a hero, because they'll say,
Right.
hey, look, hey, you paid $20,000 in self-employment taxes last year. I have converted you to an S corp. Now you pay yourself a reasonable salary. Now your employment taxes are 5,000, so, or even 10,000. I saved you $10,000 every year. I'm a
Every
hero.
year. Every year.
Every year. Yeah.
Here.
So that's the basics. And that's fantastic but for my clients,
Yeah.
and just so that you can see the next level, and there are limitations on S corps. I don't personally like S corps because they're inflexible, and we can have an entire discussion on why. But I mean, high level, you can't allocate income at the shareholder level. Like distributions have to be made pro rata. So if all of us are shareholders in an S corp, we all have to, and we're 25% owners. Each of us gets 25% of the profits every year. If we're in a partnership, it's contractual. We could be 25% owners, but let's say Shalimar contributed an additional 75K to the partnership, and he wants that money back first plus a preference. So we make $2 million. Shalimar gets the $75,000 back. He also gets a 20% kicker on top of that. And then we don't have to allocate the remainder 25% each.
Right.
We can allocate it based on the partnership agreement.
Right.
Right.
You can
And
change
not
that
just
partnership
fill out.
agreement as needed, as agreed upon, to make it make sense if it doesn't make sense from day one.
That's kind of
Yeah.
like what we got going with SIG.
Yeah.
That's exactly our structure that we run with our firm currently, Leon and I, which I think is a great way to go because it keeps it fresh and balanced to where, you know, you're able to wiggle, or if somebody want to do it, make a stronger move, you know, things can always come back their way.
No,
Yeah.
that's good. So when I think of, you know, wealth building, and I don't know why, but it's not common that tax optimization is a topic. But if you really get down to the, let's say, the bottom line improvement percentage wise, there's not too many things that you can say, yes, I made a change and it adjusted my income up 13% or 15%. I mean,
Right.
those are big margin numbers.
Yeah.
Some businesses as a whole don't make 13 or 15%. So why do you feel like this subject in general is not one of the first subjects that's taught when you think of, you know, I have an MBA from Rice, and I wouldn't say that we dug into tax optimization that deep. I mean, talked about, yeah, you know, go find somebody to help you tax optimize, and that was just a bullet point. You kept on going. So, what are your thoughts on that? Do you have any?
Yeah, because the barrier to entry is, I mean, it's you got to pay the tuition in order to understand it. So
That's fair.
when you become a successful entrepreneur and you start cash flowing and you see that tax impact at the end of the year, and let's say that bill is $500,000, that makes you want to start thinking about
Yeah,
tax optimization.
you got a little activation energy all of a
That makes you
sudden.
think about that. Yeah. How can I not pay the IRS $500,000 in a, you know, fair way, right? Of course, you know, like we're in a tax efficient manner, not like tax avoidance. Obviously, that's what we're talking about. We're talking about working within the rules to obtain tax optimization, like you said. So you got to pay your dues. Because
Yeah.
most all these publicly traded corporations, they know that that's very important. They, if they want to send shareholder value back, you know, the cash back
Yeah,
up to their shareholders, tax optimization is a
Key.
part of their program
it's
because
part
they
of it.
know,
So
yeah, you know,
I
that 21. I'm sorry, Joy.
no. I don't want to cut you off. I'm sorry.
No, go ahead. Yeah.
No, I was just gonna say, so I get it. We have to pay the entry fee and all those things. Are there any free resources out there for somebody who's just trying to, let's say, they're not trying to do their own business taxes, but they do want to have a better understanding and just have some sort of foundation or groundwork to what's happening? Are there free resources? Are there is there somewhere that I just want to know more that I can go myself without having to go to college or having to pay a tuition or having to pay an actual tax guy? Is there like something that I could do to just be more knowledgeable about what's happening out there? I know taxes change all the time and all those things, but like just to understand these things.
Yeah.
Yeah.
But hold on, before you answer, Carl, I want to answer second. I just want to throw that out there right now. I'm gonna raise my hand already. Keep on going, Carl.
Okay, so they're like, so there are articles that are written by tax professionals that are high level. So KPMG puts them out, various law firms. Where so if you want to search, okay, why should I use an S corp? So the first, like, yeah. So you have those free resources. The first question is like, how did you learn about S corps and to even Google them? So that I think that's the problem. And if you're talking about like for us, a barrier to entry is, you know, the knowledge, the exposure. So it's like, how do I know to ask the question? And in order to know, you got to be a part of groups like this of people with experience to know, okay, I need to start learning. And then once you know that you need to start learning, you'll see that there is ample information out there to get you started.
Well, and right there, Carl, I just want to tell you, I'm a backtrack. You just spit the three E's so well, without even knowing that you said you need education, you know, experience and engagement. You know, that's you just spit
Yeah.
the 3 E's so well, and that's something, you know, we live
Yeah.
by, you know, and that's part of our foundation, you know, of Whayle Mentality, that the 3 E's are very important. And if you try to get anywhere without the 3 E's, it's almost unattainable. You know what I mean?
Right.
Like you got to have the 3 E's. So Leon, sorry to jump in
And,
right.
well, and on this point, see, so here's where like I think of problems. We used to call them like when you take your PE exam, just real quick, the professional engineering exam, they put several different problems on there. It's all multiple choice, and they're trying to see, do you understand the material so well that you understand how to get through it efficiently? Because you only have like let's call it 5 minutes, 6 minutes per question. So there's certain problems on there that are doable, all right, that you can do them, but it takes like 9 or 10 iterations by hand. That while you'll get that one problem right, if you knew the material well enough, you can get right to it and answer it, or you're supposed to skip those and you work on the other 6 problems that you could do in that same amount of time because you knew that material so well that you knew, don't even go mess with that wooden truss problem right now. Go work on the other 4 that you can do in the meantime and get those right versus run out of time and then circle back.
I was going to say that's all for the world. That's all test taking strategy. That's it is strategy. As long as you have the option to go back, which unless you don't, if you have the option,
that's true.
That's testing strategy.
That's right. No, you're spot on, Joy. And that when I think about tax, and especially if you really want to optimize tax, it's a subject that's tied in everything that you're doing, but it's kind of that standoff. And I've seen people, and a lot of times it's people that are capable, that they got the information. Oh, I can read this IRS tax code, and then they dive into it, and you will eat up months of labor. And so that's cool. You save the $15,000 that it might have taken to set up your structure the right way, or 20. But it also took you 8 months, and you didn't run your business for 8 months, or you got slot. And because it's an item that, and I think you were talking a little about that, Karl, when you started talking about the engagement side, you have to stay current. So unless you're staying in the tax community and practicing on multiple cases, and every time a new president gets elected and he changes the tax code, and you get up on that, or whatever drives those changes, it can be one of those iteration dually loops that people get caught up in, where they either don't do it. That's normally what happens. They get into it and get halfway through it, and they just don't do it, and eventually hire somebody, or they do it. And then when you look at how much time it took them and the cost and or disoptimization that they had because it wasn't done as well as, now you say, okay, yeah, you spent 80 grand worth of lost revenue and time to save 10 grand. And so I throw that, I don't think that that's a case for everything, especially when you get into the base understanding of why is it even important to have that. Like, to me, I think that the biggest education is understanding that it's important to look at this stuff and understanding, okay, I want to find somebody that can help me basically earn more money that's costing me to pay you to go do the work. And that
Leon,
way,
you saying stay in your lane, man. I think Leon.
Yeah, that's basically it. There you go. Subject matter.
No, that's a good answer, and that is part of it. But what I'm saying is, I'm not talking about somebody going to read the tax home. I'm not even suggesting that a small business owner don't get a tax person. I'm just saying, where can I go so that I have a little bit of information? I'm not saying I just want to be able to go into this conversation and not have to have every single thing explained to me. Like, I'm going to ask you a nonprofit question as well in just a second, because one of our favorite rappers is LaRussell, and he has a 501c3, and he talks about it a lot. And I have an idea of how I think he organizes that, but I'm not 100% sure. So this is my thing, just being able to go in there and say, hey, what about this? How could I do a 501 versus an S corp versus why would I want to do a corporation? Not every code up in there, not LITEC and all that stuff. I just want to be able to not go in and feel completely clueless. Yeah.
No, I think that's right. Go ahead, Karl. I think that's good.
Joy and Leon, like if we want to go, because and I agree, you can but let's focus on the easy problems that you can handle, and then the hard strategy. So we got to get right. Like, so what are the easy questions and the easy problems that you should be able to solve, like, for yourself? One is substantiating your expenses. I see so many small business owners who have problems with the IRS because they don't substantiate their expenses, meaning keeping adequate books and records and receipts for their expenses, and commingling personal expenses with business expenses. That is the number one issue for every entrepreneur in every business, no matter how big or small. You have that problem, right? Because everybody has to substantiate, and I doubt that every expense that ExxonMobil makes,
Right.
and that they substantiate it, because they're employed. They have employees that are charging, that are billing back to the company that they didn't keep the record, but ExxonMobil still going to expense that. So
Yeah.
now, but is the IRS is going to be like going to go granular on ExxonMobil when they got millions of small transactions? Probably not. They're going to look at ExxonMobil's billion-dollar acquisition to make sure that was right.
Right.
So, but for the smaller business owners who, they have 100 transactions a month, and an IRS agent can easily go and look at your bank statements, you have to make sure you have that substantiated. So that's number one. Number two is having proper organization. So once you have maintained your books and records, where are you storing those books and records? How are you organizing them? How are you organizing your books and having financial statements? So these are things that you can